Good morning and welcome everyone to the Money Control live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian shares likely to sustain the consolidation breakout that it witnessed on the upside in today's session to give Nifty signals a start for benchmark 50 stock index around 20,000 levels. Wall Street ended slightly higher overnight after mixed Fed statements. Essentially, Fed governor says that the current level of the central bank policy rate is sufficiently restrictive and even hinted at the possibility of rate cuts in the month ahead should inflation continue to fall closer to the Fed's 2% target. Talk about Asian pairs. Asian stocks, in fact, have edged in lower, defying in Wall Street gains. FIIs have bought in shares worth around 783 crore and DIIs have bought equities to an extent of 1,324 odd crore. It's not a great start to the day. We woke up to the news of Berkshire Hathaway Vice Chairman Charlie dying at the age of 99. That's a bit of financial loss coming in. But the gradual return, if you talk back in terms of the equity markets, the gradual return of FIIs in the month of November post the global sell-off during the 3 months of August to October is having a steady positivity in India. The market may await state exit polls for further cues, of course, in the short term. That's in terms of the cues that we have, and also an outside chance that Nifty 50 might just end the series at the record high level. That's perhaps going to be one of the positive that we could be looking at. Well, in terms of F&O cues, they seem to be supportive, at least for stock futures. But then they've been the sellers for the option side. FIIs have been the net buyers in index futures and net sellers in index options. Of course, they've also been the buyer in stock futures. Overall, they've been sellers in Bank Nifty futures, index options and Bank Nifty options. For Bank Nifty options, the amount is to an extent of 4,968 crore. Well, in terms of F&O ban, what still remains in the ban is BHEL, Granules, Balrampur Chini, Indiabulls Housing Finance. What comes out of the ban is Hindustan Petroleum, Z Limited and Hindustan Copper. In terms of option cues that we have, Nifty PCR now stands at 1.2 versus 0.99 level. Now, this indicates the ratio essentially, which indicates the mood of the equity markets had dropped further to 1.2 from 0.99 is also indicative of the fact that the ratio above that number essentially suggests that traders are buying more puts rather than calls. But let's also talk about the strategies for the day along with the few trade setup that we have with Rajesh Palviya, who is the Senior Vice President, Research, Heads Technical and Derivative at Axis Securities. Morning there.
Good morning, Nickey.
All right, start off a bit of consolidation breakout that we saw on the upside in the previous session. Of course, Nifty scaled past that 19,900 mark. But what do you make out of the current levels?
So, looking at the overall setup, we expect that this rally can extend and maybe possibly we can hit 20,000 psychological level in the continuation of this pullback rally. The breakout is clearly backed with the put writing activity for near-term strike of 19,800, 19,900 strike. So that clearly shows that the confidence is there and on the street towards taking the bullish bet. So we expect this rally can extend towards 20,000. One can hold their long position with stop loss of 19,800. Even one can buy 19,900 call option to play this upward momentum. Projecting target for this call option around 135 to 140. Keep your stop loss at 55 rupees. Even Bank Nifty is also
sure. Before you give in your views for Bank Nifty, Rajesh, I'm just going to address in the markets open and then come back to you. Nifty 50, well, it started on a good note, 19,950, way above that mark. Remains to be seen if we can scale past that 20,000 level. That's where the eye is clearly on. 0.4% of gains coming in for this one. And of course, Bank Nifty too. Well, we are looking at gains coming in for that one. And of course, we are going to be checking about the strategy, for Bank Nifty with Rajesh in just a bit. But for now, it's 0.4% of gains coming in for Bank Nifty index. Mid cap and small cap index, let's also look at that one to see where is the momentum. Well, mid cap, a bit of outperformance there, and small cap acting no different. Let's also address in the top gainers and the top losers before we further go on to Rajesh and check with him where is the trend and what are his top recommendations for the day. Top gainers and the top losers for the list. Well, Adani Enterprises continues to be the one which is topping the charts right now. Hindalco, Adani Ports, some of the other top gainers that we have, Tech Mahindra, HCL Tech and Bharti Airtel. These are some of the other top gainers that we have on the list. Apart from that, let's also talk about the top losers there. Well, that's the list that needs to be updated a bit. Right now, market breadth is clearly in the favor of advances. 48 advances versus just 2 declines. So clearly, again, it is Adani group of companies which seem to be doing well in trade. And in previous session too, we saw gains to an extent of 5 to 20 odd percent. There was some chatter doing the rounds that, of course, it's an indication of what could happen in the exit poll results on Thursday. But of course, the main trigger behind this was SEBI holding back or reserving its order on probe against Hindenburg, the US firm, allegation of manipulation, stock manipulation and fraud for the accounts by the company. So that's a bit of positive, and since then we've seen the stocks really doing well. Rajesh, I'm going to come back to you and check with you your view on Bank Nifty now, and also do you think there is an outside chance that the series might just end at the record high level, and also what's your strategy for Nifty now?
So Bank Nifty is also looking bullish, and post this opening, now we are able to hold this 44,000 level. So 44,000 is very important level, as the most of the call writing positions were taken at the 44,000 strike. They are forced to cover their position if we hold above 44,000 level for next 15 minutes. So I think there would be another round of short covering that can initiate in the Bank Nifty, and call writers have to cover their position. That will lead to a further more upside momentum towards 44,200 to 300. That's the level we are expecting for Bank Nifty if we hold 44,000 level now. On the downside, 43,800 is likely to act as a good support area for Bank Nifty. Even in the previous session, we have seen most of the PSU as well as the private bank have started, showing good traction in terms of buying. So I think Bank Nifty can also give good support to the market, and there would be another round of buying interest. So we can see towards the expiry, 44,300 is the target where we are expecting for Bank Nifty. For Nifty, yes, there is a probability of 20,000, 20,050 kind of level for this series. But yes, again, to cross all-time high level for this series, that looks a little tough at this moment, because the call writing activity is still there at 20,000, 20,100, 200 strike. So I think, yes, post-expiry, we can see a new all-time high. But towards the expiry, yes, there is a high probability for 20,000 mark for the Nifty, and we can cross that level also for a short while.
Sure. Rajesh, also I'd want to chat with you about Adani group of companies. They've been doing rather well. Of course, the other trending stock that we have is Tata Technologies, which is going to be listing in tomorrow. There's a bit of excitement around the allotments, and the Twitter is quite viral with who's got the allotment and who's not. But Adani group of companies first before we address in stocks and news.
So most of the Adani group stocks have done well in the previous session. Still, we believe that Adani Enterprise have shown a lot of short covering action in the previous session. Adani Port is also looking promising at this moment. Both stocks have managed to give breakout on their near-term consolidation. So looking at the structure for Adani Enterprise, if it's hold about 2,400 level, then possibly next target for Adani Enterprise we can see towards 2,550 in the near term. For Adani Port, the immediate target for Adani Port is at around 865 to 870. If it's a hold above 830 level. Adani Power is also looking very promising. The kind of breakout which we have witnessed on the daily, weekly time frame, that clearly shows that Adani Power can scale up to the level of 490.95. So one can look to buy this stock also with stop loss of 450. Even on the Ambuja Cement, there is again buying interest. Even on the most of the cement stocks have done well, but Ambuja Cement is also looking promising. One can keep their stop loss to hold long position around 418, and upside target can be seen towards 455.
Sure, Rajesh, I'm just going to be addressing in stocks and news. Stay on with us, and again, we are going to come back to you and check with you about the potential stocks that could do well in trade. Of course, IREDA, which is going to be it's going to be listing on exchanges on November 29th. The issue price has been fixed at rupees 32 per share, and according to the grey market premiums and the website across, the expectation is that the stock would be listed around a premium of 31 to 34%. So to keep an eye out on this one, Zomato, where Alipay is likely to sell in 3.4% of equity via a block deal, and the stake sale is for a value of 940 odd crore. The stock is up already a percent and a half thereabouts. That's the source-driven news that we have from CNBC TV 18. Of course, we're also going to be talking in about Orchid Pharma, where the promoter Dhanuka Laboratories has sold in 2.56% stake in the company, and this has happened via an open market transaction at an average price of roughly 571, which is a significant discount as compared to the current market price. And UTI Mutual Fund has apparently bought in at a price of 571. That right now the stock is doing well, and we're watching gains to an extent of a percent and a half thereabouts. Canara Bank, where RBI has approved in 70% stake divestment in Can Bank Factors. The stake sale is essentially in an unlisted subsidiaries, and Canara Bank also plans to buy out Bank of Baroda and DBIL shares. So that's a bit of a development out there for this PSU bank. Not doing extremely well, but still clocking in gains to an extent of 0.5% in early deals. PCBL, another one that you might want to watch out for. Well, the company has acquired in 100% stake in Aqua Pharma Chemicals. This is for a price of 3,800 crore, and the funding is likely to be a mix of internal accruals and externally fundraised. This marks the company's foray in the global specialty segments of water treatment chemicals and oil and gas chemicals put together. Right now, the stock seems to be doing well and is up with gains of around 3.5%. Now, do bear in mind the fact that the acquired company, as of FY23, the revenue and the financials, revenue is almost 2,000 crore, EBITDA is 470 crore for this one, and the acquisition is valued at 9.1 times FY23 EV to EBITDA levels. That's the previous year. What Nuvama essentially has to say about this one is that the near-term stress on balance sheet for the company, which is PCBL, which is also up by 3.5% in trade today. But the acquisition will upgrade the business model and drive a re-rating. It is also raised in the multiple for the company to 8 times from 6 times, and increased in the target price to around 280 levels from present 210. But Rajesh, I'm going to come back to you and check with you which is the other top recommendation that you have for us this morning.
So, Nickey, I think one should look at automobile space. That space is clearly buzzing, and the kind of traction which we are seeing in most of the automobile stocks, that clearly shows that this really can extend further. So, Hero Motor is looking promising. In the previous session, also stock has shown good traction. We expect Hero Motor can continue furthermore upside. 3,700 to 3,710 is the next target for Hero Motor on the high side, and keep stop loss of 3,580. The second stock that we like is from oil marketing company, and we expect that HPCL Hind Petro can continue furthermore upside. Very strong buying interest is there in oil marketing company across the board. And looking at the data setup, we expect HPCL can be outperformer. 355, 360 is the next target. One can buy with stop loss of 334. And one stock is from PSU Bank, that is PNB. We have seen again stock showing good buying interest, and overall structure is bullish, series of higher top, higher bottom formation on the weekly chart. Looking at the near-term setup, stock has taken the support from its 50-day moving average, and the kind of buying interest was there in the stock in previous session. We expect PNB can continue. upside momentum towards 85 to 86. One can buy this stock with stop loss of 76 and half.
Sure, Rajesh. So we're just going to leave it at that. And thank you so much for taking out the time and having a conversation with us. All right, let's address the fundamental side of the story. Of course, a few of the stocks have been really buzzing in trade, Adani group of companies, and of course, auto components and the automakers rather, which have increased in their price come the new year, in the new year, at least that's the plan. But to take the discussion forward, we're being joined by Deven Choksey, who's the managing director at DRChoksey FinServ Pvt Ltd. Morning there, Deven.
Good morning. Good morning, Nickey. Good morning.
All right, we've not typically woken up to a very good news today, where we had the news coming in from the Berkshire, where Charlie Munger has died at the age of 99. That's a little short of 1 year short of 100. But your learnings or your takeaway from this one?
So, Nickey, good morning. And it's first and foremost, I think, sorry to hear about this particular news. But more importantly, this kind of legendary investors, we are lucky that I think we are living in this era where we have experienced the legendary investors like Charlie Munger, Phil Fisher, and even Warren Buffett kind of investors who have basically, I think, brought in a significant amount of change in the investing. And that's where probably I think is more important. For our generations, I think we look up to some people to understand how exactly investing can be successfully done. And what better way than to learn from the experienced people who have, I think, passed through this grind of investing. We learn from their experiences. So we pray God for resting the soul of Charlie Munger in peace, but at the same time, continue to learn from whatever the learning that he has shared in his lifetime with all of us. Continue to learn from it, and I think we pass on this legacy to the generation next year after. That should be my wish.
Sure. I mean, I think the quote which resonates the most with me is you don't have to be really brilliant, only a little bit wiser than other guys on average for a long, long time. I think there are many more such learnings from him. But getting back to the markets, let's address in the sectors that you think have been doing well. Of course, I'm going to start off with Adani group of companies first. Well, the entire group companies has been doing well. Yesterday, there was a development where a news report suggested that SE has reserved in a probe against the company. What do you make out of developments like these for Adani group of companies, especially that of Adani Power, which has done extremely well on YTD basis?
So respective companies, individual companies of the group, I think they are in a very fundamentally sound business. And they have created a very enviable situation for themselves in every vertical in which they are operating. Be it in roads, be it in airports, be it in coal minings, be it in the area of ports, or for that matter, power generation, renewable energy, gas distribution. Each of these businesses, I think this company has created a significant amount of moat as far as their approach to business is concerned. Fortunately, what one has seen in the last 20 years, the continuous emphasis of building the infrastructure. Today, they are actually leaving the fruits out of this build of infrastructure. On last year's annual accounts, I think about 60,000 crore worth of EBITDA. It is compounded at the rate of around 20% in the current year, and maybe continue to compounding further at the rate of 20% plus in at least next 4 or 5 years, I think, from the existing activity. So this is fundamentally very strong. The coverage ratio on EBITDA, as far as the debt is concerned, has come down to somewhere around close to 3.5 times or 3.25 to 3.5 times from what it used to be more than 4 times the plus. So that again, I think, spells out, I think, a very clear amount of understanding on the business, where companies generating cash and at the same time debt is coming down. Debt is also coming down from raise of new funds, and that is again, I think, fundamentally very strong. So each of the infrastructure businesses are showing the visibility of cash generation for next 25 to 40, 50 years. And that is fundamentally very important, because any long-term investor with an investment interest in a utility business, annuity business, they would probably find the meaningful investment opportunity in the investment in the Adani group of companies. So frankly, fundamentals remain absolutely convincing and very strong. As long as I think the market starts understanding these fundamentals, start giving the stability of the stock price, I think that will be accepted well by the investors.
Sure. Apart from that, the sectors that you think that are doing well, essentially, ahead of the exit poll results, essentially stocks that you think that could do well in the run up to that, and of course also something in the run up to the coming year, because you have the defense theme, you have the capital goods theme. What do you think is the sector that you'd be betting big on at this time?
Frankly speaking, I think ahead of election results or election poll exit outcome, etc., I don't think that anybody should take a bet on that basis. However, if you are looking at the fundamental strength of the market, then there is certainly a case for investing into consumption space, where the discretionary and non-discretionary consumption is gaining momentum as every single day passes by. Because of the government's larger thrust on building the infrastructure, we are seeing the momentum happening in the new order book position for capital goods segment. Because capital goods segment is receiving new order book, the entire engineering space is getting the momentum, along with metal space also getting the relative amount of stability. So in my viewpoint, entire value chain works phenomenally well when you have one particular sector which is being taken care of under the spending by the government. They are spending 10 lakh crores on infrastructure in the current year. Next year, I think budget might go by at least 30%, if not more. So from that perspective, if one has to look at the opportunities are practically there in most of the sectors. Wherever I think we see the higher amount of discretionary and non-discretionary consumption taking place on a personal consumption portfolio, they are the automobiles, along with that automobile ancillaries. They are the OTC companies in the pharma product business, or some of the specialty generic business in pharma. You are also seeing FMCG companies participating, FMEG companies participating. Many tech enablers are also equally interested in the position at this point of time. So they come from mid-tier IT company space. So all in all, put together, even EMS space, I think where you have got a larger amount of thrust from defense and railways, and these companies are the suppliers to them. So I would say selective pockets. I think you are going to get a lot of opportunities in every single company that you probably come across. All you need is a patience to buy. All you need is, I think, buy when the market gives you at a discounted price, and stay invested for a longer period of time. I think market may go up and down, but staying invested for a longer period of time may make more sense in some of these companies in the current times.
Deven, I also wanted to chat with you about the new age companies, something in the likes of Zomato also, apart from the bunch of other names that we have, Paytm, Delivery, but a block deal involving around 29.7 crore shares for Zomato, where Alipay is supposed to offload approximately 3% stake there, which is likely to happen, or has happened for that matter now. What are you looking, how are you looking at companies like this? Do you personally like Zomato in terms of the fundamentals, the way it's shaping up, and the valuation now that the stock is looking at after the it has entered a club? It's the market capitalization has really grown too big for this one. How are you approaching it right now?
So on one side, the business of the company is showing the signs of improvement, which is a fundamentally very positive thing to do. Platform usage charges and other such kind of fees is certainly helping this company to get the cash flow back. So which is again a good point. But the question would arise that I think company which is making a sub 100 crore worth of profit is commanding more than 1 lakh crore worth of market capitalization. So the valuation wise, I think you are far more expensive at this point of time in this business. And as if there is no tomorrow, and as if I think there are no other players who are going to enter into this space, I think the market has given the crazy valuation. In my viewpoint, good business with an expensive valuation is not a right formula. Well, you have to wait for some price correction moderation taking place. On the other side, the early investors who entered into this company as strategic investors, they are now exiting the company. So obviously, I think the financial investor is now taking birth in the company. Financial investor definitely also have a mandate to earn that kind of a return in a shorter period of time. So the stock is expected to remain volatile in coming period. And maybe I think once the battery of new investors enter into at an expensive price, you might see, I think, some amount of moderation in the stock price, the correction in the stock price. Any fall in the price, I think, would be a meaningful opportunity to buy into the portfolio. But currently, I see the stock remains expensive proposition.
Right. The last question that I have for you, Deven, in that case is Tata Technologies. It's going to be listed in tomorrow. According to the experts, the listing premium could be in the range of 75 to 80% over the issue price of around 500 per share. Of course, a bunch of things working in the favor of the company, strong parentage, healthy financial performance, and solid IPO figures, subscription figures. What's your expectation?
Well, I think again the fundamentals of the business of the company remains extremely strong and convincing. The peers like Tata Elxsi, Design Technology, even for that matter L&T Mindtree, or even for that matter KPIT, I think they are all having one common trait across, that they are addressing the engineering R&D part of the IT technology, which is being supplied to respective end customer segment. So that's a fundamental business model, which is basically giving you the clarity that given the focus on automobile, given the focus on transportation sector, aviation sector, I would think that this company would have relatively higher amount of growth to assume in subsequent period of time. And that's where probably I think you are justified in buying the company when it hits the IPO market and stay invested in it. I do not know about the listing price. I do not know whether I think one should buy listing price or corrected price thereafter. That is not something which I do know at this point of time. But I do believe that if the valuation is not going expensive on listing price, probably I think it is making a sense to buy this company into the portfolio, given the long-term prospects that you are enjoying.
All right, Deven, we're just going to leave it at that. And thank you so much for taking out the time and having a conversation with us.
Thank you so much.
All right, this particular segment has been reserved to pay a tribute to Charlie Munger. It's in a significant loss to the financial world. Billionaire investing sage Charlie Munger, recognized for his pivotal role as Warren Buffett right-hand man at Berkshire Hathaway, has passed away at the age of 99. In an official release acknowledging Charlie's demise, Warren, CEO of Berkshire Hathaway, stated, Berkshire Hathaway could not have been built to its present status without Charlie's inspiration, wisdom, and participation. Apart from his position as Berkshire's vice chairman, Munger wore multiple hats: a real estate attorney, chairman, and publisher of Daily Journal Corp, also board member, philanthropist, and even an architect. Despite possessing a fortune estimated at $2.3 billion in early 2023, the wealth was overshadowed by Buffett's staggering at least $100 billion. A quote of which resonates the most with me, I would say, and with a sense of reiteration there. You don't have to be brilliant, only a little bit wiser than other guys on an average for a long, long time. Well, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Money Control app.